Hello and welcome. Today we're talking about a powerful wealth building tool that many homeowners have but not fully understand. Home equity. Here at Truth Group, we want to help you unlock that potential in a way that aligns with your financial goals without the risk of overextending. So let's dive in. So what is home equity and how can you use it? Simply put, home equity is the difference between the current value of your home and the balance left on your mortgage. Let's say your home is worth 1.4 million and you owe 800,000. That's 600,000 in equity that could be used strategically to build wealth. You can leverage that equity in a number of ways for investments, home renovations, or even debt consolidation. But here's where it gets tricky. Many people believe they can access all the equity, but lenders typically allow you to access up to 80%, and only if your borrowing capacity allows it. For example, if you have 600,000 in equity, 80% of that is 480,000. However, if your borrowing capacity is only 200,000, then that becomes your limit, not the full amount of your available equity. On the other hand, if your borrowing capacity is 480,000 or higher, you may be able to access the full amount of that 80% equity. That's why understanding your borrowing capacity is critical. Now, let's talk about the two main ways to access your home equity. Home equity loan. This is a separate loan using your home equity as collateral, often structured as a line of credit. This type of loan gives you a set limit which you can borrow against as needed, similar to a credit card but secured by your home. It's helpful for flexible access to funds, but it requires discipline to manage. Refinancing. With refinancing, you replace your existing mortgage with a new one, ideally with a more favorable rate or term. A cash-out refinance lets you access a portion of your home equity as cash while restructuring your mortgage. How do you decide? Here are some key points. Number 1. Interest rates. Home equity line of credit tend to have higher interest rates rather than traditional mortgages. Compare your options to find the best fit for your financial situation. Home equity line of credit often comes with fees that may be monthly, semi-annual, or annual, so factor these into your planning. Number 3. Negative equity risk. If your home's value drops, you could end up owing more than what your property is worth. It's a risk worth considering, especially in a shifting market. Number 4. Purpose of the loan. Lenders may ask you how you plan to use these funds, particularly for larger amounts. So having a clear purpose can help streamline the process. Number 5. Financial discipline. A line of credit gives you flexibility, but only making minimum payments can mean owing more than expected over time. Here at Truth Group, as an experienced mortgage broker and buyer's agent, I'm here to help you weigh these options carefully. I can assess your borrowing capacity, review your loan structures, and craft a strategy that allows you to use equity responsibly. I'm here to guide you on maximizing your home equity for wealth building purposes, whether that's through investments, renovations, or debt consolidation. Ready to unlock your home's potential? Reach out to me today for a personalized consultation. Together we'll develop a smart, sustainable plan that aligns with your financial goals and helps you use your home equity wisely.